Hello and welcome. I'm Toby, and today I'm with tax and wealth specialist Laurie, and we're here today to talk about cryptocurrency. Laurie, thanks so very much for joining us. Laurie, there's been a lot of debate about crypto as a legitimate asset class or as a legitimate alternative to money. How do you see it?
Well, Toby, we're in a digital revolution, right? And it's transforming whole industries. If you look at a good example would be Uber, Uber cabs. Also, there's Airbnb. Now, that's created great benefits for consumers, but more so it's created additional income for a lot of ordinary people, extra money. And they tried to shut it down, and they didn't succeed because it's a good idea, you see, yeah. When we look at crypto, it's just part of that revolution. If we look at fiat currencies or current like US dollars and euros, we know they're printing tons and tons of it and put it into circulation. And the evolution of crypto started because of that. That's how it started. I mean, tech heads only are there to solve a problem, but the problem's got to be created. So the problem started when the GFC started, and they started printing insurmountable amounts of currency and devaluing their currency by increasing the money supply. Just to give you an example, US dollars now, in the United States, are printing $12 million a minute.
A minute.
And putting that into, a minute, and putting that into circulation. But it's all going to go digital. They've already said it. So the US Federal Reserve has come out and said they're going to create a digital version of the US dollar. The Europeans said they're going to come out with a digital version of Euro dollars. The Chinese have already created their own digital currency. And these are major economies. These are the major central banks. So so you can imagine yourself in a digital currency world, right? You got to choose between which digital currency you want to own. Would you rather own the US dollar, where they're printing $12 million a minute, or would you rather own Bitcoin, which is in limited supply, and they're only actually creating more Bitcoin to pay people that are actually working on the system?
Laurie, I've heard crypto described as a volatile marketplace. Would you agree with this?
Yeah, it's volatile because it's a new technology, Toby. So all new technology is volatile. So if you look at the price of Apple shares or Tesla, they move. They have a lot of volatility compared to other stocks. And even when the dot-com boom started, those shares were quite volatile as well. So it all comes with a new technology. The second reason is because there's a lot of speculation in the crypto market. It's an unregulated market, whereas the share market's very regulated, and therefore, because of there's very little regulation, then there's going to be more speculation. And the third reason is because there's a lot of leverage. In the share market, most shares you need at least 50% deposit. So if you want to buy $100,000 of BHP shares, you put 50,000 down, you can borrow 50. So you have to have at least half the money. Whereas in crypto, you can put 5% deposit and borrow 95. So there's a lot of leverage in the crypto market. So and that's the reason why it's a lot more volatile than anything else you've seen out there.
So is it safe to invest in long term?
It depends what you're buying, Toby. I would suggest you buy crypto assets that are in the decentralized finance area. And I'll explain what that is. So basically, decentralized finance actually, there's these platforms which act like an online bank, and they match lenders to borrowers. And one of the major players in that area is actually Ethereum. They're like the mothership of decentralized finance. And decentralized finance only existed for roughly 2 years. 12 months ago, it was $1 billion industry. It increased to 20 billion by October. And then by February, it increased to 40 billion. And now it's sitting around 60 billion. So it's growing very aggressively. So these are the sort of coins you want to get involved with. So we've got a situation here where you can now get $100,000 of your cash, put it into one of these platforms, which is like an online bank, right? And then you can get 14% on your money. Now, you might think that's a little bit unsafe, but they actually secure your money by collateral of the person they're lending to. So this platform ensures that they've got enough either cash or assets in their account to be able to pay you back. And if they don't, then they will sell their assets and pay you back. So they secure it that way and they provide collateral that way. So it's a decentralized finance area that's growing rapidly, and I would look for coins in that sector that provide these sort of services.
So in this new explosive growth of opportunity, Laurie, there seems to be an awful lot of options that are on the table. Is there any in particular that you would suggest?
Yeah, look, I would go. Ethereum's like, as I said, the mothership of decentralized finance because that's where all the growth is. So if we go Ethereum, I think that'd be a good coin to own. It's sitting around $2,000 at the moment, US, and was $104 only 12 months ago. It was high as $4,000 just last month. As again, that's just speculators getting overexcited. And the other one I recommend is probably Thorchain, a 4-chain rune, it's called. What that does, it acts like the New York Stock Exchange. It actually it creates demand for the coins as there's more transactions in the crypto market. And then there's Cosmos Terra, which enables Ethereum to run a lot faster. As Ethereum grows more in popularity because of decentralized finance, and Cosmos Atom would play a role in enabling Ethereum to move quicker. I like those three coins. So I would recommend or suggest those.
So where and how do we buy these cryptocurrencies?
Yeah, first of all, Toby, I suggest you subscribe to some recommendation report on crypto. The best one out there is probably WEISS, WEISS ratings. They provide a good crypto advisory service of what to buy. For the actual coins themselves, I recommend, you're going to have to go on a platform to buy them, which is probably the easiest way to do it if you're new. The best platform I recommend is SWIFTX. So they provide a service where you can buy all the coins. They're based in Queensland. They're regulated by ASIC. So you can buy all your coins through that application or that platform. Also, I would suggest that once you buy the coins, that you actually ask for the passwords for each of your coins and store them on a computer and put them in a safe place as well, just in case FTX goes bust, then you've still got the passwords and you can recover your coins.
Can a self-managed super fund buy cryptocurrency?
Yeah, so look, you can't buy crypto with superannuation if you're with an industry fund. You have to have a self-managed super fund. In order to have a self-managed super fund, you're going to need at least a fund balance of $250,000. A couple can do it as well, as long as you've got a combined value of $250,000. You can't just invest only in crypto because of the diversity rules. So you actually have to buy some shares or some other assets and keep some in cash. So you can't just buy all crypto with your whole fund balance because it goes against self-managed super fund rules. But the biggest advantage in actually buying under super fund is that on any capital gain from crypto assets that you may make, you only pay 15% tax on it, as opposed to 50% if it's outside super. If you keep the asset for more than 12 months, you'll pay 10% in super, as opposed to say 25% out of super. So if you sell the assets after you retire, so you declare yourself retired, then you'll pay 0% capital gain on the crypto assets once you sell them.
Thanks, Laurie. If you would like to get in touch, click on the webpage link below and make a time to talk.